But let's go to the first management on the show. J&K Bank reported a steady set of numbers in the past quarter. But what's the way ahead? We're now joined by Mr. Amitava Chatterjee, the Managing Director and CEO. Hi, Mr. Chatterjee. Good morning. Thanks a lot for joining in. Well, the loan growth for the past year was just around, for the past quarter, was around 6%. How do you see growth shape up for the remainder of this year? What's the target in mind? And also, your CD ratio has come to sub 70%. Where do you see this number stabilizing at?
Good morning. Thank you for having me here. The loan growth obviously has been low because of various reasons. For the last financial year, there were quite a few disruptions in this geography. But we have taken up, and there is a lot of potential. We have identified a few process gaps that were there. We are correcting. In fact, the first quarter of this year has mostly gone into correcting those process gaps. So the guidance that the bank has given on 12% credit growth for this year, I am very confident that it will not be less than that. It should be more than that. The growth comes 50% from the UT of J&K, where we have a major presence, and the 50% of the growth comes from the rest of India, where we also have a presence in almost 20 other states. So that is more or less the idea going forward.
All right, we take that point, Mr. Chatterjee, and understandable that there was a fair amount of weakness that we saw in the quarter, given the operations that took place during the quarter on a national geopolitical front as well. So you hold on to that 12% growth guidance. 50% of that will be led by J&K and the other 50% from the rest of the country. What about deposits? That was healthy. Your CD ratio went all the way up to 68%. Where do you see this going forward? And also, because of what took place in the first quarter, do you see any incremental pressure on asset quality by some of your borrowers who may have lost some business?
See, first I'll answer the asset quality part. Yes, if I say that there has been no impact, it will be a wrong statement on my part. There has been an impact not only on tourism, but other sectors related to tourism. But if you look at the NPAs and the SMAs, they have not gone up that much. So as I have held earlier also, the resilience on the part of the people of Jammu and Kashmir, and having faced several such incidents in the past, they know how to handle these situations. So I would say it has reached a level from where it is definitely going to come down, the NPA levels. Even otherwise, the slippages have been less than 1%, even during this situation.
So what does that mean for your GNPA guidance and also your net NPA guidance? If you could give us a sense, you're guided for sub 3% by the end of this year. It's currently 3.5%.
Definitely, it will be. See, there are two reasons why it was 3.5%. One is, as you mentioned in the beginning, the credit growth had not been that much. So it's a ratio against the total advances, right? So where I believe the advances are definitely going to go up, and the NPAs absolute level, they have not gone up much. So definitely we have sufficient reasons to believe that there are quite a few resolved cases, high value resolved cases, which are in the pipeline. It should have been recovered by the first quarter. Some reasons, some technical reasons, which resulted in shifting that recovery to the second quarter. So we are very confident that sub 3% is very much achievable, and we will achieve it.
Okay, all right, sub 3% gross NPS, got that. Let's focus on two more points then, on the NIMs and the ROAs. The NIMs saw a little bit of a downtick, but that's expected, right? Because the RBI as well cut rates, and I'm guessing that you would have passed most of that through. So how do you expect the NIMs number to shape up? And what is the targeted ROA?
See, NIM, I believe that still this bank can boast of a better NIM than many other banks, primarily on account of 45% plus CASA deposits that we have. And we are very, very focused on improving CASA further because we have we have been late entrants in the IT and the technology front in the bank. Now that we have done it and the bank is poised to take the bank's IT to the next level, through this, definitely we are hopeful of improving our CASA further. So that will help us in maintaining the names to the levels that we have at the moment. Worst, in fact, would be somewhere around 3.6, upward 3.5 definitely. So I believe we also can expect some more rate cuts going forward. So I believe 3.5 to 3.6 would be a fair judgment on NIM. Rate of ROA, we believe that we will be able to maintain the ROA that the bank currently, had in the end of last financial year. This quarter hasn't been, the return wise hasn't been very good. Primarily on one count, we had to have provisions for the one state, one RRB, one EDB. Regional Rural Bank has been amalgamated with one of the our sponsored Grameen banks. So that has resulted in impairment of, because that was not doing well, impairment of the investment in that. So that has resulted in some sort of decline in the income that has accrued this quarter. Otherwise, we were poised to have the 30% jump on the net profit.
All right, so 3.5 to 3.6% on the NIMs. You believe that asset quality, return on asset rather, will be maintained at around that 1.4% mark, which was what you saw in the fourth quarter, with over 12% revenue, with over 12% loan growth and about 3.5%, less than 3.5% NPAs. What about CASA and the CD ratio? We briefly touched upon the CD ratio earlier. You said CASA is something that you're looking to increase. It stood at 45% at the end of this quarter. Where do you expect to take it by the end of this year? And on CD ratio, do you have a target?
See, CD ratio, if you look at the CD ratio, I look at it as an opportunity. I still have sufficient headroom to take the CD ratio to 75, 76%. Of course, that will be over a period of time. I believe by the end of this year, the CD ratio will be upwards 72%.
Got it. And CASA?
And CASA, we aim to take it to 48%. Looking at the banking sector as a whole, it has been losing CASA and mostly to high-yielding deposits. Whether it is bank deposits or mutual funds. So the entire industry has been losing CASA, but then we have an advantage of being in a geography where we have a very major presence. The market share is more than 60% here. And having been late entrants in the technology front, we have a lot of opportunity of improving our CASA here. So I believe we can take it up to 48%.
All right, CASA at 48%, CD ratio at around 72%. Thank you so much, sir, for joining in and giving us a detailed outlook into what the next 1 year could look like for you. We hope that there are no skirmishes and there is no unforeseen circumstances, and you go ahead and do meet all the guidance that you've set out for your business and your shareholders as well.